All right, everybody. Stocks by the numbers. Welcome back. Thursday after market close here. We're going to take a look at a couple of the companies that I looked at. And again, I apologize in advance because I know that I uploaded my earnings prediction video a little late on both YouTube and on X. But if you guys can, I would say follow me on X because I saw that I was uploading the video late, so I tried to kind of tweet out. I think it was maybe like around 3:30, basically summing up what I personally predicted for a handful of the companies in the video. So, you could have saw the predictions there, and I even posted them in the Discord as well. Discord link in the description of every video. But yeah, obviously it's much easier to do it like that if we're looking for instantaneous information, right? If I want to analyze a company like Walmart and make a video on that, it's like, you can probably see it when you see it. But if you're specifically looking to do like an earnings play tomorrow after market close or something, then obviously if you wanted me to just quickly look at it sometime midday so that you can take a position, in my opinion, it's definitely much easier for me if I can just give you an opinion a couple of minutes later on X or through Discord. But I'll try to update. I'll try to upload these earnings videos earlier in the day. So my apologies right out of the gate. But also, I want to say I am man enough to admit not only when I'm right, but also when I'm wrong, right? I don't hide here on this channel. We all know that no one's perfect. We all make bad calls. And again, the problem that I'm seeing with some other people is that it's always positive, right? You always hear about the positivity and how awesome they are. And it just doesn't seem realistic at times. So, let's look at where I was wrong. So the first company we're looking at is Dell Technologies, ticker symbol DELL, listed here on the New York Stock Exchange. Company, as you see, was up about 1.5% here today going into these earnings. And again, I said puts. I actually thought revenue was going to come in light. The company apparently reported the exact opposite of what I thought was going to happen. The company comes out, beats on the top and bottom line, increases the dividend by 20%, and also mentions about the growing backlog that they have going on and the shift that's taking place, that what looks like anyway, in my opinion, the shift that's taking place here in real time to AI. And of course, any company we're seeing that is, mentioning AI or connected to AI has just been absolutely raging. But Dell, it looks like, has the numbers to back it up. And what I want to look at here is, first of all, the revenue comes in above expectations here. Estimates of 22.167 billion. The company posts 22.318 billion, beating by over 150 million on the revenue side. Again, in my opinion, I was expecting like a miss of like a couple of hundred million like that, coming in slightly light and then potentially pulling the stock back. I looked at some of the fundamentals and I saw that the debt was pretty high, in my opinion. I think it was like 20 something billion and change, and we have a market cap of 66 billion, and also the company currently has a negative book value. So, and it's been up for quite some time. So I actually thought it was just due for a pullback, in my opinion. But I have to give credit where credit's due. Dell apparently comes out with a really nice quarter here, good beat on the top and bottom lines. And I'd like to pull up an article very quickly for you, run through some of these numbers here. So EPS here 220 from $1.80 a year earlier. They were expecting a decline down to 172. That's why it's also very good news. You were expecting them to be a little less profitable, and they were much more profitable. Revenue fell 11% to 22.32 billion, but came in higher than the street's view of 22.17 billion. So that's what we see also here with these stocks, because sometimes you see, the revenue's going down a little bit. That's a bad sign, right? That means the stock's going down. Not necessarily. We know that there are peaks and valleys in the business world, and sometimes, some quarters, some years are better than others. And this is why they lay out the forecast moving forward for the next 1-2 quarters, 1-2 years, and, we adjust accordingly. And what we're seeing here is that even though revenue estimates were lower, if a company can consistently come in above expectations, then it's still technically growing faster than analysts anticipated, right? Or growing a little bit more than what we anticipated. But we can see share surge. Quote, we've just started to touch the AI opportunities ahead of us. Here we go, including broader adoption of AI by enterprise customers and the projected growth in unstructured data, where we are well positioned with industry-leading storage solutions. Revenue in Infrastructure Solutions Group fell 6% year over year to 9 1/3, led by a 10% decline in storage, which includes hardware like personal computers, generated revenue of $11.72 billion, down from $13.36 billion. So in my opinion, what we're really seeing here, and I understand this is just like, looking at 1 or 2 years of data. I'm not bashing Dell's PC market or what, their segment or their business. But what we're seeing here, I think, in my opinion, is you're seeing the shift away kind of from all of these other areas of the business, and it's strictly pouring into the AI business. So the company, with declining numbers on what used to be their bread and butter, right, their personal computer market, what you're seeing is the decline in that revenue is actually being subsidized and even outweighed by the new revenue coming in for the AI segment of the business. And I think that we're going to slowly see a company like Dell just become predominant in the AI space, believe it or not. And I know a lot of people may not think they're one of the bigger players out there, and I understand they also, have to feed off NVIDIA and AMD, like all of the other companies out there. But we are seeing some good growth here, and they mentioned the backlog as well. Quote, in the near term, the PC market is still soft, and we expect recovery to push into the second half, of course. Overall, enterprise and large customers were, quote, cautious with their tech spending in the fourth quarter. Yeah, you know why, in my opinion? Because I think it's because everyone and their brother is now utilizing AI. So I think that all of these companies kind of just put all of their metrics into this machine and just had it spit out like the best strategy to maximize profits, rapidly increase revenue growth, and just accelerate the expansion overall of these companies. And I think that we're going to start seeing in the next couple of quarters, and again, not just specifically Dell, I'm talking about a lot of these other companies. I think that we're going to start seeing in the next couple of quarters some moves that may not immediately make sense, or looking at them years ago, like you wouldn't have been able to explain it. You wouldn't have been able to explain yourself. You understand what I'm saying? But if the AI that everyone's using now is forecasting and showing these people what they could potentially be seeing in profits, in revenue, if they make these changes or implement this strategy in the next 2, 3, 5 years. And I think it's just flooring everyone, and you're just seeing the massive shift into the whole AI space. But again, I think it's going to result in some big restructuring of these companies, because chances are, a company like Dell showing that, their PC market was softening, so to speak, guaranteed you plug all that into AI and it'll probably tell you, like, yeah, start getting out of that area and go into this area. You know what I'm saying? So I do believe that this is going to be an AI player, but pretty decent quarter overall. But that's just my opinion on what I see taking place here. Company plans to deliver on its long-term goals, average revenue growth of 3 to 4%, very nice, and a rise in EPS of at least 8%, CFO said. Quote, we remain optimistic about the coming PC refresh cycle. PC install continues to age. Windows 10 industry makes advances in AI-enabled architectures and software applications. 20% increase in dividend. Yeah, they also mentioned an AI computer. Rising demand for its AI servers equipped with NVIDIA chips. Bear with me. Here we go. Dell said its backlog of AI servers, most of them powered by NVIDIA H100 chips, has now reached $2.9 billion, compared with $1.6 billion last quarter and $800 million 2 quarters ago. So in 3 quarters, we have gone from 800 million, doubling to 1.6 billion, almost doubling again to 2.9 billion. Now, hold on. Dell has shipped 1.5 billion of AI servers over the last 2 quarters and said it has a pipeline of interest in AI servers that is, quote, multiples of the current backlog. Multiples of its current backlog. So this is what I mean. This is why I feel like Dell will slowly over time just shift this entire business to this AI segment and just kind of leave the others by the wayside. And, you know, if they come up with something and it generates some revenue, then it would just be, you know, an extra icing on the cake, so to speak. But that, in my opinion, I mean, that may cause continued growth. Because, again, I understand I mentioned the debt and the negative book value. But I have a feeling that with this growth and with this revenue coming in, I actually think that Dell will be able to right the ship even more. And I think that they will potentially, in my opinion, become even more profitable moving forward. And I think that apparently with these backlogs, I think that not only will it keep the company growing overall in the numbers, but I also think it will be more than enough, in my opinion, to supplement any other losses or declines in revenue that they're seeing from other segments moving forward. So, in my opinion, like this time 3 months from now, going into next quarter's earnings, if this stock, you know, hit highs or is trading up in like the 130s, 140s even, in my opinion, I actually think it would kind of be understandable. And then depending on how positive that next quarter is, you can potentially see, you know, 150 and north of that. But, you know, obviously the company still has some work to be done here. That debt, again, didn't really sit well with me, but that's just me. But, again, now we're talking about AI servers growing and backlog, and, you know, now we have a tech stock, and the company's bringing in 20 plus billion a quarter, and the market cap's only 67 billion. Well, now it's more, obviously, but you know what I'm saying. I think we can see much more growth here, in my opinion. Seeing improved supply, H100, additional demand for servers from AMD's MI300 chip. See, mostly PCs, Client Solutions Group, mostly PCs, was 11.7 billion, down 12% a year earlier. That is consistent with the softer than expected quarter reported on Wednesday from rival HP Inc. So that's what I think we're seeing here. I think these older tech names, these companies now, they're probably, in my opinion, going to have to begin shifting away from, I guess we can say, like last gen technology and move now into the whole AI age and embrace this and start, you know, with the servers and devices with AI, programs with the AI. You know what I mean? It's obviously, we see what's taking place. It's just growing insanely fast, the AI sector. But yeah, it remains a bit cautious, but the company continues to think that a refresh cycle is coming as COVID era laptops age. Dell plans to launch new AI powered PCs in the second half of the year, but expects adoptions to roll out over multiple quarters. So that could be interesting as well. However, again, if they're not one of the go-to names in the PC space, then that might not immediately start generating the type of returns that they were expecting. But again, second half of the year, so you cross that bridge when you get to it. New quarterly dividend. Okay, that's enough with Dell. Let's move on to NTAP, NetApp, NTAP here on the NASDAQ. There's another one that I got incorrect. As we see, we also kind of have this poll with this potential flagging taking place, so we could potentially take that next leg higher. Company hitting new 52-week highs after hours here, sitting at around $102, up almost 14.5%, getting as high as 104.01, and you know, pulling back and obviously getting ready to rocket forward. But NTAP overall posting some decent numbers here. I was expecting, again, this estimate here. I know it was sub 1.6 billion. And what I was looking at was see how we were at 167, and then we pulled back 152, 158, 143, 156. So I wasn't personally sold on the fact that the company was going to be able to hit that 1.6 plus billion revenue mark. But of course, they made me look like a fool, and estimates were 1.591 billion, and the company posts 1.606 billion. On the EPS side, beating as well. Estimates of $1.68.9. The company posted $1.94, coming in almost 15% above analyst expectations. And again, based off of this decent quarter now, we can reevaluate the situation, and we see again with that 6 billion mark, obviously the stock is up big, so now we have like a $20 billion market cap, 21 billion and change. But in my opinion, they may actually keep this one going slowly over time. And with that 6 billion mark, now you're above that 3x mark it was sitting at. PE, sitting here 30. So they really could continue to climb it. I mean, we could see easily, in my opinion, another 10-15% potentially, bringing that market cap up to like that 24-25 billion range, which would be, about 33% increase from here, which would be $120 in my opinion. So I think that is the next level that this stock is going to take, and probably slowly going to get there over time. 120 to 130 in my opinion, because again, even though some of the fundamentals that I looked at I thought weren't too hot, but apparently, if they want to pump it up, then yeah, in my opinion, you may see 120, 130 continued highs potentially moving forward. Quarterly rate of surprise, reduced earnings, delivering a surprise. A quarter ago, yep, they surprised, okay. Over the last 4 quarters, the company, yep, beating EPS. Year ago, revenue 153, now they're at 161, this time last year. Okay, I love these Zax articles. Current EPS estimate is 174 on 165 billion for the coming quarter. 616, 624. No, but they up there. Yeah, no, wait, hold on. Here we go. NTAP now expects full year 2024 adjusted EPS between 640 and 650 a share versus prior range of 605 to 625. So that's about a 5% increase from previous expectations. So NTAP coming out with a good beat here on the top and bottom line, and obviously beefing up that profitability outlook moving forward into 2024. Stock getting rewarded almost 14.5% here after hours. Very, very nice. Switch over to Skin. Do we have numbers? Skin, we do not. Company files non-timely 10K with SEC. Sales for the fourth quarter are expected to decline slightly to the corresponding period in the last fiscal year. Well, wait, hold on. Okay, so wait, 380, so that would be an increase, 380. Coming back to it. I don't want to take time looking at that right now. Switching over here to Hewlett Packard, which is another one that I got incorrect. Hewlett Packard makes a fool of me. And I thought with these revenue estimates dipping back down to the lower $7 billion range here, estimates of $7.089 billion, the company would meet or at least exceed those expectations. In my opinion, it actually looked undervalued in the numbers. I know we saw mentions in the Dell article about HP, the other HP, but we can see here estimates came in light, 6.755 billion, beating by almost 7% there on the EPS side, but just not a good look here for Hewlett Packard. Sees downbeat Q2 revenue on weak networking solutions demand. Business scale down, spending server, shares of surge, uncertain economy, higher interest rates. Enterprises are hesitant to sign new contracts, commit to long-term initiatives, or take on new technology partners, although IT spend is expected to increase in 24. HPE expects revenue in the second quarter in the range of 6.6 to 7, below analyst average estimate of 7.1 billion. It also reported a 13.5% fall in the first quarter revenue. CFO said that, quote, softening of the networking market and GPU deal timing. Revenue run rate was up 42% to 1.4 billion in the reported quarter. Expect to roughly double its networking market share with its planned $14 billion deal for Juniper Networks. So, it's funny because, right, I was literally saying when speaking about Dell that these older companies may have to readjust and kind of redirect where their company is going and what they focus on. And again, I understand looking for the deal there with Juniper, which of course, as it said, would double its market share. However, we're seeing hesitant spending, right? Hesitant to sign new contracts, commit to long-term initiatives. And they also, and the CFO said that the miss is due partly because of the softening of the networking market. So, I don't know, actually. In my opinion, that this could potentially get bad. This could potentially get bad, in my opinion. Even though, of course, looking at the numbers and looking at the companies the way I do, I do feel that the company is undervalued in the numbers. But I don't know. Median 12-month price target, 1850. Yeah, see, the profitability has not been the issue. The profitability has not been the issue for Hewlett Packard. And again, we were down here sub 20 billion market cap, the PE single digits, right? Consistently beating on the EPS side. That's what I mean. That's not the issue. It was, you had this big sell-off, lost about 10% of revenue here over these quarters, 7.7 billion down to 7 billion. You begin to rebound to 7.3, and now you just completely drop the ball, break through that 7 billion mark, and now you're back down to 6.75 billion. So we have to see if the Juniper deal really does kind of reignite this whole situation for HPE, but I don't know. I really don't know. In my opinion, yeah, see, and we were in this long-term, look at this. This is going back, I went from the highs here back in March of 18 to the lows in March of 20, and we were kind of staying in this whole long triangle, and I drew this out many months ago, actually. And you can see we had like slight breaks out, slight breaks down, and recently we broke down, and you can see the stock got back to the trend line basically right there. And then these earnings came out and they were negative. So now you can see we're lower than we were previously. So in my opinion, I actually think they continue to beat it up even more, taking it the next leg lower here into the 1370 range potentially. In my opinion, you know, if I was an analyst and you asked me, where is this going? That's the price target I would give. That is the price target I would give for Hewlett Packard. HPE, disappointing quarter. Switching over here now to Navitas, Semiconductor, ticker symbol NVTS. Stock closed up over 6%, closed here after hours, up over a quarter and up over 4% here. And we can see that the company beats on the EPS side by almost a cent, but the jump up in revenue, again, last quarter, we were seeing consistent increases in revenue, and last quarter, the company was just shy of 22 million. Now, estimates, as you see, were up to above 25 million, and the company posts 26 million, beating by almost 2.5%. So, very nice quarter there for Navitas, Semiconductor, NVTS. Earnings surprise 20%. Right, surpassing. Year ago, 12 million. Now we're at 26 million. So, excuse me. So it was growing nicely. And in my opinion, what did I say? I said puts just because of how overvalued it looked in the numbers, in my opinion. Because, again, even if they posted this 20-something million, we're talking about roughly 100 million for the year. And now you can see we have a market cap above 1 billion. So we're trading like 10, 12 times that yearly revenue number. However, they do consistently keep coming in above expectations, not only on the EPS side, but on the revenue side as well. And you can see this nice growth here, going from these low teens up to 18, almost 22, now at 26. So we are seeing a growing company here. And again, I appreciate the fact that I said, in my eyes, it was a little overvalued. I know I called puts, got this one wrong also, but seeing a nice pop here in Navitas, NVTS, after hours, roughly 4% pop. And so we're there. So that's almost halfway that is about halfway, actually. So, in my opinion, based off this positivity, you could see a rally up here to this fib. I'm looking at the 1 year. You could see a rally up to this fib, in my opinion, of 719 again, and that may potentially cause the double top, and then it could start to pull back again and sell off potentially back into the sixes. But here in the immediate short term, I would say that they're probably going to keep this one moving upward. NVTS, up and comer, one to keep an eye on. We looked at, all right, ORGN and FSker. So we're looking here, ORGN now really beginning to decelerate here. If we look at the numbers the company brought in, amazingly, they actually beat on the revenue side. And I personally was looking to see what was going to happen. And the company ended up on estimates of 12.2 million. The company comes in above 13 million, beating by over 7%. And on the EPS side as well, posting a loss of 9.4 cents, estimates of a loss of 14 cents, almost 33% above that expectation. But we're seeing now that the stock is dropping hard here. I did mention the low 40s, potential new lows, even down to that fib. I think it was 36 that we looked at. And let's see if we can get a little bit of a clearer picture here. Okay, pathway to profitability. Cash burn reduced between 55 and 65 million. Significant gross profit generation expected to begin in 2025. Okay, which means we're going to technically remain negative for about the next 3 to 4 quarters. ORGN Materials, again, this company, world's leading carbon negative materials company, has apparently made a shift, and honestly, I don't even remember what they did, but I remember they restructured the whole company and the stock fell off a cliff and everyone jumped out. And, now people are potentially talking about class action suit because they supposedly misled investors. And, yeah, the production of the ORGN facility was delayed now by like another year, and it was going to cost like billions more or something. So the stock just fell off a cliff, made great progress, de-risked the business. Beginning in 25, with healthy growth trajectory thereafter. We forecast continued reduction in our net cash burn while maintaining a solid minimum cash floor. Standing experience over the past few years due to inflation, higher rates, and supply chain shocks, the demand for our biomass conversion technology remains strong. As such, I am particularly proud of our team's innovation. Cost-effective recycling circularity to a greater than $65 billion market. Yeah. Oh, so what's going on? Our initial product passed third-party tests. Yeah, your board of directors. Including financial capability, labor, manufacturing, right. These were revised front-end engineering design for this. In the face of these industry-wide headwinds and our expectation that industry-wide large capital project execution costs will continue to be inflated for some time, today we are announcing that we intend to commercialize and scale our biomass conversion technology in partnership with other major companies, with potential strategic partners providing a substantial portion of the construction capital. Okay, operating expenses up roughly 50%, 19.8 million compared to 13 million in the year prior. Manufacturing costs 2 million, depreciation, R&D. Full year operating expenses were 60.1 million compared to 38.9 million in the year prior. Yeah, about 50% increase. Manufacturing costs, R&D, 5.5 million. Net loss was 10.4 million for the fourth quarter compared to net income of 16 million in the prior year period. Full year net income was 23.8 million compared to 78.6 year prior. EBITDA loss 11 million for the fourth quarter compared to 9.2 million in the year prior. Full year adjusted loss 41.6 compared with 31 a year prior. $4.5 million shares that are subject to forfeiture based on share price performance targets previously disclosed in our filings. Yeah, no, I did say in my opinion I felt it was going to get worse before it gets better. And this trend line down here, 40 cents. Yeah, you can see that's the bottom of the range. You can see the stock is right here. And that's why I said, in my opinion, we could see 40 cents ride along and come down to this bottom fib here of 36 cents. And unfortunately, that is what's happening. Origin Materials, ORGN on the NASDAQ, down over 29% on an EPS and revenue beat because the company is burning cash and basically just kind of pissed everyone off. So people, I feel like people don't even care. They don't want any part of it. we're seeing here FIsker. Last time someone asked me about this in the Discord, as you see, it was around 70 cents. I mentioned the potential descending triangle, dropped to 50 cents. The stock ends up dropping, hitting new lows of 52 cents. Goes on a nice rally, basically back to right where it was going into these earnings. And now we can see the company, as I said, comes out with a big miss. And granted, increase in revenue, right? Last quarter, 71 million. They missed on a 100 million estimate. Now estimates jumped up to 327.726 million. I was 99% sure in my mind that they were going to come nowhere near that number, and actually even 2 million actually shocked me. But the company posts 2 million, big miss there by almost 39%. The loss is widening like crazy. Estimating the loss of 23.2 cents a share, the company loses $1.23 per share. And I'm sure no one is talking after it warns investors. FSR reported weaker than expected fourth quarter sales. It also included a, quote, going concern warning in its update to investors. Shares are plummeting in after hours trading. What did I say? I literally said, right? And again, I hate to pat myself on the back because, again, I know I made a bunch of wrong calls on basically all of those tech stocks that we looked at earlier. But when it comes to crappy companies, I mean, you do have to give me a little bit of credit because I do try to keep you guys away from the garbage, in my opinion anyway. And even when I posted on X and said in the Discord, I said, yeah, in my opinion, I think, puts on these stocks maybe, calls on these stocks maybe, and I literally specifically said ORGN and FSR I would not play. And they're both dropping hard right now, and FSR apparently warning its investors. Thursday, the EV startup announced fourth quarter was looking for 330, produced 4,789 vehicles. It delivered 3,818. And its partner made 10,193 FSR Oceans. 4,929 were delivered. Huh. FSR ended the year with almost 400 million in cash on its books. Cash used 24 was expected total 300 million. That was based on sales of 1.9 billion. FSR expects to sell 20,000 to 22,000 cars in 24, which implies sales of closer to 900 million to 1 billion. So we're about 50% short of where we thought we'd be. FSR also projects key expenses to total roughly 330 to 390 million this year. Looks like the company will need more cash. That is one reason FSR included a, quote, going concern warning in its news release. That essentially means FSR can't continue to operate as it has for the coming 12 months without a significant change. The company added in its news release that it is in, quote, negotiations with a large automaker for a potential transaction, which could include an investment in FSR joint development or one or more electric vehicle platforms and North America manufacturing. The identity of the automaker isn't known. FSR didn't immediately respond to a request for comment. FSR stock was down 30%. Shares were down. Rising EV competition sapped investor enthusiasm. And that's the way the cookie crumbles. Down 36%, currently 46.5 cents, hitting new lows. And let's quickly look at Soundhound real quick, and I'll let you guys go. So Soundhound was climbing here during the day, ran almost 17% on high hopes here of these earnings coming out. You can see the stock pulling back 17%, so I guess you can say no harm, no foul. But the company comes out missing on the EPS side here, slightly widening loss here by about 1.5 cents more above expectations. You can see a miss of about 25%, and we can see on the revenue side estimates of 17.747, which we knew was a big jump higher. They came in, they broke the 17 million mark, but they posted 17.147 million, missing by roughly 600 million. And they supposedly say that, demand is up and, everything's going to consistently keep increasing. So, the problem is, of course, in the immediate short term, especially because it ran so much so quick, now technically with a miss on the EPS and the revenue side, we got to bring the stock down a little bit, right? So we can see lost 7 cents per diluted share, narrower than the loss of 15 cents a year earlier. Very nice. We were expecting a loss of 6 cents. Revenue 17, up from 9.5 million a year earlier, almost doubling, but coming in shy of that 17.7 estimate. Company expects full year 2024 revenue between 63 and 77 million. Analyst polled expects 69.3. Okay, right mid-range. Expects its revenue to exceed 100 million in 2025. Two analysts surveyed by Capital IQ expect 25 revenue of 97.9 million. So, again, went very high very quick, and because we technically missed, we bring the stock down. However, again, they're saying throughout 24, we're expecting more money, kind of in line with what you guys are looking for. 25, we think we're going to hit that 100+ million mark above your original estimates out there for 25. So, Soundhound, I had a feeling it was going to cool off, but again, I said in my opinion that if I was in for a while with the shares, I wouldn't sell. But again, that's just me personally. I know we're all different. We're all in different financial situations. We have to sell at different times. But Soundhound here, basically giving back the whole rally it went on and then some for the last couple of days. And you can see down here in the low sixes, 611 down 131, a little over 17% on Soundhound. But of course, they're saying that these numbers are going to continue to grow. And they also mentioned, hold on. Thanks in part to a revenue contribution, right? Soundhound AI's revenue rose from what the voice AI company describes as, quote, a preeminent AI chip company, but doesn't call them out by name. The CEO tells Wall Street Journal this company one Soundhound has known and partnered with, quote, for a number of years and is now receiving revenue from via an IP licensing agreement. The chip maker could be NVIDIA, which disclosed in mid-February that it owned about 1.7 million shares of Soundhound as of the end of 23. NVIDIA also participated in a 75 million funding round for Soundhound in 2017. So they say that it is a preeminent AI chip company that they've been doing business with for years, partnered with for a number of years. So people are now speculating that this is NVIDIA. And what that means is NVIDIA is paying Soundhound to license out this technology. So this is what I said. This is why I personally was bullish on Soundhound, because I mentioned that not only was the CEO who said himself they were approached numerous times, but I said that in my opinion, if it looks like the business is going to continue to grow and it looks like everyone's going to have to use their voice AI technology for their business, then because the company at the time was only worth a couple of $100 million, sub 1 billion, I said that in my opinion, it may be worth it to step in now before those costs for licensing get out of control, and you can simply gobble this company up for a couple of billion nice and quick while you're still small. And then now if NVIDIA is potentially going to be that person, again, I'm speculating, but if NVIDIA is potentially going to be that person, now they can obviously just expand it out even faster and further because of their size. So, in my eyes, again, immediate short-term drop, in my eyes, 110% justified. We could potentially see $5 and back sub $5 back into the 4s potentially, because it did run so much. But overall, they are projecting more growth moving forward. And if that is NVIDIA, then we may have something interesting percolating here for the longer term. But I'm going to end it there because I talked way too much. So once again, this is Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky and volatile and uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. Have a good day.